I've been in broking for 40 years, which means I lived through, like many of my colleagues, lived through the 1987 crash. Just to give you an idea of why a crash happens. Why did the 1987 crash happen? I was in London at the time, and the way we saw it, the market had performed fabulously for the past year. And the way we saw it, there was a young dealer on our desk, and our desks were open plan desks. So there were, at this time, about 100 people. I worked in UBS desk once, which had over 200 people on one floor. This was a London broker who had about 100 people on an open plan desk. And suddenly one of our younger dealers, and each dealer talks to a particular institution or group of institutions, the big fund managers, not individual people, the big fund managers. And suddenly he started writing red tickets. Red tickets were tickets, there were a red pad, there were no computers. You had to write everything in pencil. On a red pad. That was a sell ticket, and you wrote out what you were trying to sell, ripped it off, took it to the dealers. They rang it down to the stock market floor. So suddenly he was pulling off red tickets. And usually during a day, a dealer might do, I don't know, 10 orders, something like that. Might do $1,000, $2,000 to $10,000 worth of commission. Pounds in those days. £10,000 would have been a huge day. So suddenly he's doing £100,000 in a day. He's just pulling red tickets off. And that night, it was a fantastic day on the dealing floor, big volume day, and all the partners used to sit on a plinth. 4 of them used to sit slightly higher than the rest in those days. No one was too worried about equality. They sat on a plinth, and they took us all down to the Mithras bar in the evening, where we drank pints of Pimm's, all got hilariously drunk to celebrate this one particular fabulous day from this one particular dealer. And we all came in the next day, a bit of a headache, and to see whether it carried on, and it did. And he was still going, red tickets. And at this point, the partners, from celebrating, suddenly go to panic mode. What's going on? And they rang the fund manager involved that he seemed to be selling at any price for no reason. Not for no reason, but at any price, didn't seem to care. It was just about getting volume done. And they rang up that fund manager's boss and said, "Is this legitimate?" And were told, yes, it is. So they realized from their experience that this was a major fund manager doing a lot of selling. So the first thing they did was, in those days there wasn't a lot of compliance, they sold all their own shares. Then they got on the phone to their family, got them to sell everything, and then they got on the phone to all their institutional clients, their best clients, telling them what was going on, that this big institution had decided to sell and that they should start selling, and then everybody started selling. Before you knew where you were, the whole thing cascaded. So everybody asks, what caused the 1987 crash? And it's a bit like asking, what was the reason a drop of water came over a dam before a dam collapsed? What was the first drop that came over the waterfall, or what was the first crack in the dam? What caused that crack? Well, the truth of the matter is, you can analyze that first drop, you can analyze that first crack, you can analyze the first selling in the stock market ahead of a crash, but the reality is that what caused it was the build-up of pressure over the period of a year. The stock market had gone up over 50% in a year. That built an enormous amount of pressure, and ultimately it doesn't really matter what cracks the dam. What cracked the dam was the market had gone up a heck of a lot in a short period of time. It was unsustainable, and at some point a big institution in an ivory tower, probably in New York, it was a US institution in this case, sits down in an asset allocation meeting and says, the market's high enough, we need to start selling a few things before everyone else does. And that is done quietly to start with, but ultimately everyone gets to know what's going on, and they all cascade in behind the dam. The cracks get bigger, the more water comes over, and that one drop in the case of the 1987 crash was one fund manager in a New York skyscraper deciding that they would reduce their equities exposure, and it all just went from there. But the cause was the market going up in the year prior. And that's how a crash happens. It's not the first seller or a reason for the crash. it's because of what's come before, often for a period of months, if not years, ahead of the crash happening.